There is a young man you see on the screen right here that I have known now going on, what, Taylor, 7 years?
7 years.
7 years. Taylor has been a sponsor of our show now for the last 5 years, 4 or 5 years.
That's true.
And he is a very integral part of our business. Taylor is in the insurance business. He probably writes probably 95% of our business. Um, and first and foremost, Taylor, I want to say thank you. You know I love you. You know you're a very, very dear friend of mine. We appreciate you. We appreciate what you do for our clients. We appreciate the sponsorship. Uh, that's all I got, baby.
Man, I appreciate you. You did. I don't even get a word in here. This is going to be the Kevin show with guest appearance by Taylor. But no, I appreciate you guys, man. I love doing this stuff. So thank you for bringing me on, and I'm looking forward to the show.
Well, I will tell you, and I think I stole this from you, but you actually make insurance understandable and a little fun.
There we go. I try my best. I try my best.
That's right. So, homeowners insurance, car insurance, I don't want to steal any kind of thunder, but here's what I'd like to talk about today. Uh, this is an interesting business. I've been in the mortgage business for, this is my 24th year. How long have you been in the insurance business?
7 years. I mean, right? I met you pretty much out of the gate, and so I've been working with you since I was a baby in the insurance field. I guess I'm closer to 8 years now.
Right.
So I didn't walk into your office like the first day and try and meet you, but I was definitely young in my insurance career. So I'm about 8 years in now.
That's fantastic. Well, I will tell you guys, um, never in my life, and I mean this, and I've been in my career now, sounds crazy, 44 years in my entire career. Um, I've never met somebody that knew so much about insurance that goes with character, integrity, and the way that you present it.
Um,
Plus, you know, why did you get into the insurance business?
Well, I think I got into insurance, and I think I've explained this to you before, but the biggest reason I got into insurance was the lack of understanding. I came from a background of business and sales, and an opportunity presented itself with insurance. So it wasn't like I was looking to pursue the insurance field,
Right.
but an opportunity presented itself, and really that's where my passion grew. I don't think anybody goes through life having a passion for insurance. But when I got into the industry is really when my passion grew, and the lack of understanding that I had for even my own policies when I first got into the industry, that's what kind of sparked the fire for me, and that's where that's the reason I've been able to make it work as long as I have, and I've been thankful to do it.
No, it's impressive. It really is. Walk me through, and I'm asking you questions that I know, okay? But this is not about teaching me. I mean, we've got our followers, we've got people, and we're trying to do, Taylor. We have completely revamped our YouTube channel now, and
Okay.
we're bringing real heavy content. Meaning, we've got segments. We do FHA, we do VA, we've got a lot of talking head segments on there now that people can actually, we're trying to create a library, okay? And we've spent a lot of time and a lot of energy and a little bit of money trying to do this. So walk me through. I'm calling you today. The Kevin Blair team has sent somebody to you today. We've got a house. It's $349,000. Walk us through your initial conversation.
My initial conversation, well, first off, and whether you're sending them to me, whether they're just calling and shopping, of course, the number one question that I always have for somebody is what's got you shopping for insurance.
Okay.
Obviously, when you send them over, it's a pretty common denominator, right? You've got to have it in order to close on a loan if you got financing on it. But my biggest question always is the first thing is what's got people shopping for it. I've kind of find their pain points that way, and those are always things that you can reemphasize when you go through the process of offering them insurance coverage. Because if you don't ask those questions and you don't find out if they have any pain points, you could be completely missing what they're looking for. So that's the first thing, and it's usually, 9 times out of 10, it's always price driven. But that's always one of the things that I always tell people as well. If price wasn't an option, what else? Tell me what else is important to you. Because when we're talking price now, I mean, we're going to get into this at one point, right? When we're talking about the state of our business and stuff, I mean, you let it off in the show, but we're going to get into it. This is the worst insurance market that I've ever been a part of, and probably the worst one in over 40 years that I've heard of. This is where.
Why is that?
Yeah, great question. So it's twofold, really. Number one is amount of losses, right? We're seeing things that are unorthodox. I mean, we saw a hurricane in California, a month ago or so. When has a hurricane ever happened in California? The amount of catastrophes are happening are above and beyond what they anticipated. And so it's an underwriting game. So obviously they account for these losses, the carriers do, right? They say we should have X amount of losses, and those have been blitzed through these past couple of years. I'll give you just some brief numbers. So in the first quarter of 2023, the home and auto industry lost $8.2 billion in the first 3 months of 2023. They just released the second quarter numbers, giving us the first entire 6 months. And so in the first 6 months of 2023, we are only $2 billion short of the losses of the entire 2022. So we're going to blitz through losses in 2022 as well, far beyond that, which was not a profitable year.
I'm out just a second. When you say losses,
start going.
No. You're sparking some great questions. When you say losses, you're talking about claims that they paid out?
That's exactly right.
Okay. All right.
Yeah, and so we talk about, and when we're talking about this, the reason why I say it's twofold is I'm obviously emphasizing the amount of losses, but we're also talking the payout on these losses as well, right? I mean, obviously inflation is hitting everybody, but you got to think a lot of these homes that we wrote homeowners policies for people, and the carriers rated it at maybe $110, $120 a square foot, back, and that wasn't that long ago. And so now when we go to rebuild a property and they rated it for, hey, if we have a loss, it's going to be $120 a square foot, but they're having to rebuild it for $180, $190 a square foot, they weren't ever taking in the correct amount of rate. They can't increase rates long enough, and that's going to get me on another soapbox.
Oh, I know.
But they can't increase rates quick enough to even keep up with where they need to be taking rate-wise to make sure that the company's profitable. So you're seeing, I mean, the amount of underwriting guidelines that we're running through right now is just insane. I mean, we have, I can't stop, man. Once I go, I can't stop.
No, but it begs the question, because I don't know the answer to this. What happens if we had somebody that we rated it at 120 a foot and now it's 190 to build it? Where does that 70 come from?
That's a great question. That is a phenomenal question. Now, most policies are in there. So, I've got a couple carriers. I think I've come on and talked with you about one of my carriers before that I'm absolutely in love with, because they do they give an estimated reconstruction cost. Let's say it's $350,000 or $400,000, but they guarantee your replacement up to $5 million. There's few carriers out there that give you that guaranteed replacement provision that, although they think it's going to cost X amount of dollars to rebuild, they guarantee the replacement. It's a huge peace of mind thing, and what's been happening over the past few years, because they might have had a policy written at $120 or $130 a square foot to rebuild, and now with it being $180 or $190, they still have enough coverage. Okay. Now, in the event
if we're not using that company, where does that $70 difference come from?
Yeah,
is that
the client eats that? The client eats that, and that's why it's so important. I mean, you and I have talked about this multiple times when we're talking reviews of people. We're talking reviews. You talk about reviews of mortgage all the time, a mortgage checkup. We talk about insurance checkups and reviews all the time. These are real things that are happening, and people are getting shorted out on their house being rebuilt just because they did not review an insurance policy and it couldn't keep up with inflation.
So what I'm about to do, I've never done during one of my podcasts. I'm about to send Sherry a text.
Okay.
We need a checkup. I mean, are you kidding me? Taylor, if you look at what's happened right now, to give you an example, the average American equity, it's higher than ever before. 274,000 is the average American income right now.
Wow.
Think about that. If in our home we have our checkups, but our home that we bought for 275,000 is now worth almost 600. If we're not doing something, if we don't have somebody like you that's following up with us to say we need to look, We need to look. We need to make sure that we're covered. Taylor, we've never talked about that. That is huge.
Huge. Well, and the reason here's the big thing as well. So I haven't even gotten into the Department of Insurance aspect of this. So we all know that there's obviously a Department of Insurance in each particular state, right? And so all these carriers, with all these losses that are coming through, all these carriers are coming to the Department of Insurance and saying, hey, we need to increase rates 30, 40% to get back to a profitable margin. And the reason they need to do that is because, like you were talking about, they need to increase that reconstruction cost on those policies as well. Well, I know a couple of years back when I was with a previous carrier, they got about a 20% rate increase approved by the Department of Insurance, but that only increased the reconstruction cost on the house by 20%. So they can't even have the ability to increase the reconstruction cost enough because the Department of Insurance isn't allowing the carriers to raise the rates enough. I'll give you an example of, we talk about states, and these states that are in despair right now: Texas, California, Florida, all these ones you see major carriers pulling out of. And I'm going to tell you the reason why. It's Department of Insurance. So let's take California, for instance, in dire losses right now. They went to their Department of Insurance and said, hey, we need 40% of rate to get back to being profitable. And you know what the Department of Insurance says? We'll give you 6.9%. We'll give you 6.9%. And they said, okay, that's fine. But what about next year? We got to get up to this 40%. They mandatory will not let you increase rates more than 6.9%. So you know what all the carriers are saying? They're saying, fine, I'll take my ball and I'll go home. Bye. I'm not writing business anymore if it's not profitable. So that's what we're dealing with right now. And that's why it's just an absolute conundrum of what we're dealing with. It's crazy right now.
So what's the end game? How's this corrected? How's it fixed?
So I was on a call the other day. Auto losses have been severe as well. And so the auto losses, they think they can fix that product by the first quarter of 2024. Again, it's just raising rates and trying to get those to be profitable. I actually read something earlier today about Tesla Insurance. Tesla Insurance, does their own insurance, and they prided themselves on doing that because Teslas are such a safe vehicle. And I wish I had the article pulled up when I was going to get on here, but I didn't know I was going to talk about it. But they're talking about how much money that company has lost as well, just because insurance is it's just crazy. But the home product, we don't know what's going to happen with catastrophes. One year there could be none, and the next year there could be 100. So everything that I'm thinking, we are going to continue to be in insurance. We call it a hard market, right? And so we're going to be in this hard market on the homeowner side probably until 2025. It's going to be a rough another year and a half before we start seeing that.
So we've got headwinds in both of our markets.
Yeah.
We've got some rising cost in both of our markets. So, which is what I love having you on, because it sparks so many different rabbit trails that we could literally do this for 2 hours. I don't know if anybody would listen for 2 hours. Literally,
Probably not.
So we've got rising cost, we got rising rates, all right, which makes it difficult for people to qualify, all right. So now, because of things that we've been doing, I'm licensed in 9 states, and I'm seeing quotes from Pennsylvania. I'm seeing quotes from Texas. I'm seeing quotes from Florida. That's unbelievable. I'm talking unbelievable.
Unbelievable.
And it changes the value prospect. It can change it 100,000 or more. When we're talking about getting qualified, and thankfully in Tennessee, North Georgia, Alabama, where we're at right now, we're not completely sheltered. We've had our share, but this is huge. We've got a hard market. However, here's the thing, because I will forever say, because 24 years in this business, Sherry and I bought our first home in 1980. Okay, my side of the business, in the last 40 years, home values have come down 7 times. 7 times in the last 40 years. All right.
Wow.
11 of the last 12 recessions, they've gone up or stayed the same.
Wow.
It's still, to me, a great time to buy, to build equity. All right. We just have to get creative. I don't know, brother. I don't know.
Well, I love I'm kind of the same way as you. I'm a glass half full kind of guy. it's a hard market, but it doesn't mean there aren't opportunities that can present
That's
themselves.
right.
And it's one of those things that I've seen a lot of insurance agents getting out right now, people that are newer in the business, and this is the first time they're hitting this and don't have a way to go through it. And so there's going to be a lot less people that are going to be looking for that piece of the pie because people are getting out of the industry. And so the people that are left in the industry, there's going to be a lot more pie for us if we just keep on pushing through.
You know what you just said is happening in the real estate market. It's happening in the loan officer market. Okay, we saw a stat that 2 years ago there's 190,000 loan officers. By the end of this year, they're talking less than 80,000. Okay,
Wow.
now in this year alone, there's been over 70,000 realtors, and they're because their renewal season is coming up at the end of the year. We don't know what the numbers are going to be. But here's the key, all right, because I've been through a couple of these things before, '07 and '08. Those of us that put our heads down and kept working, we even got better at what we did because we had to. Okay.
Agreed.
And there's still a need. There's always going to be a need for what you and I do. So I try to keep these around 15, 18 minutes, and we're at 16 minutes. And I really want to do something. I want a strong call to action on your part about a review. Okay. If there's anything that's come out of this, it is having a review. And I know you do the same thing I do. You'll freely talk to somebody. You'll look over there. You know what? If I called you today and wanted to do a review, what would you do?
Yeah, we would just obviously we would set things up, and I would try and not many people. I love doing stuff like this. I love doing video conferences and stuff with people. I love putting a name to a face, and so I do this a lot in my business. But most of the time, it's just having a conversation. We've got a checklist that we go through and talk about. Hey, have there been any improvements to the house? Has there been anything that you've changed in the house? Has your status at home changed at all? We have a multitude of questions that we kind of go through, but we also go through. We have a standalone again, a reconstruction cost estimator for a client's property. So even though a carrier, let's say I have a client coming up for a renewal, and that carrier might have increased their reconstruction cost from 300 up to 330, that 10% increase might not have been enough. So the carrier does it automatically to try and keep up with things, but in this particular market, it might not work. So we have a standalone reconstruction cost estimator that we can go back in, ask that client those questions again, and get an updated real one. Because the carrier is always going to give us the ability to offer more coverage, right? So if I go in and see their standalone replacement cost estimator is now $420,000 versus it only being increased to 330, that's a real conversation that we have. Because we've had clients when we had the tornadoes back in 2020. I had a couple clients, say when they had a complete loss on their house, they just said, we're just going to walk away and we're going to go somewhere else. So when you look at that coverage A dwelling amount, as I've told you, there's what we call extended reconstruction cost. Let's take a $300,000 reconstruction cost. Well, normally, as I told you, there's that little slush fund on top of about 25% saying if we exceed it to keep up with the inflation or the materials changing. But the reason that number of $300,000 is important is because if you ever go to walk away, the max you can get on there is what is on that coverage A dwelling. So even though it might be $450,000 to rebuild, and maybe you had enough coverage on your policy with that extended replacement, if your coverage A dwelling only says $300,000 and you want to walk away and move somewhere else, you can only get $300,000. So you're better off then you got to go through the hassle of trying to rebuild just to sell it if you wanted to leave, and that whole process of what we're dealing with, even in reconstruction, how long it's going to take. So those numbers are important. It's definitely something to keep an eye on.
Absolutely. All right, Taylor, what's the best way for people to find you?
Yeah, always call me at the office. You guys can, visit us online. My website is www.eliteinsuranceTN for Tennessee.com. You can call our office 423-635-7717. Or you can always email me directly, taylor@eliteinsuranceTN.com.
Fantastic. And same thing here. Our website is kevinblairteam.com. Our phone number is 423-488-7571. It's answered 7 days a week, except from 9 to 10:30 on Sunday because she won't let me take my phone to church with me. Guys, if you like this kind of information, hit like, hit subscribe, ring that bell. If you want more information about me and my team, go to our About page. fill out a short form, I will call you personally. Taylor, I'm going to say it, and I'm man enough to say it. I love you. I, appre-
I love you
I
too, man.
appreciate you and what you do for me, what you do for our clients, and it's always a pleasure.
And thanks for having me on. Roll
You
Tide.
got it. Oh, listen to you. All right, brother. Take care.